Hey everyone, welcome back to the channel. Today, we're talking about something super important, how you can start investing with just $100. Yep, you heard that right. You don't need thousands of dollars to begin your investment journey. In fact, small investments can make a big difference over time if done right. Let's dive in. Now, some of you might be thinking, why even bother with $100? What difference can that make? The truth is, starting small can be powerful. First, it helps you build the habit of investing, which is crucial. Second, small amounts when invested wisely can grow over time thanks to compounding. Remember, it's not just about how much you invest today, it's about getting started. First things first, you'll need an investment platform or brokerage account. The good news is that there are tons of platforms out there where you can start with just $100 or even less. Apps like Robinhood, Webull, and M1 Finance offer commission-free trading, making them great for beginners. Look for platforms with low fees and no minimum balance requirements. Also, keep an eye out for platforms that allow fractional shares. This means you can invest in expensive stocks like Amazon or Tesla, even if you don't have enough to buy a full share. You'll be able to invest a portion of your $100 into high-value companies. Next, let's talk about what to invest in. A great option for beginners is ETFs, or exchange-traded funds. ETFs are like baskets of stocks. You buy a share of the basket and get exposure to multiple companies. This is awesome because it automatically gives you diversification. Instead of putting all your money into one stock, you're spreading the risk across multiple companies. For example, with $100, you can buy into ETFs like Vanguard's S&P 500 ETF, VOO, or Invesco's QQQ ETF, which tracks tech companies. ETFs are generally less risky than buying individual stocks, and they're perfect for people starting small. Automation is key to building wealth over time. Many investment platforms allow you to set up automatic transfers from your bank account into your investment account. This way, you can keep adding to your portfolio without even thinking about it. With just $20, $50, or $100 a month, you'll see your investments grow. This method is known as dollar-cost averaging, where you invest a fixed amount regularly, regardless of market conditions. It's a great way to avoid the stress of market timing and to stay consistent with your investing. Another great option for small investors is dividend stocks. These are companies that pay you a portion of their profits in the form of dividends. With as little as $100, you can buy shares of companies like Coca-Cola, AT&T, or Johnson & Johnson, which offer steady dividend payments. Over time, dividends can add up, and you can even reinvest them to buy more shares, leading to more dividends in the future. This is a great way to build a passive income stream, even with a small amount of money. Now, the most important thing to remember: patience. Investing is a long-term game, and the real magic happens thanks to compounding. The more time your money has to grow, the bigger the returns can be. So don't worry if your $100 doesn't turn into $1,000 overnight. The key is consistency and giving your investments time to grow. Alright, that's it for today's video. Remember, you don't need a ton of money to start investing. Just $100 can get you on the right track. If you found this video helpful, be sure to like, share, and subscribe to the channel for more investment tips and strategies. Also, let me know in the comments, how do you plan to start investing with $100? Let's chat. See you in the next video.